Support for Short Stops is presented by the Caylum Trading Institute. Check out our website at www.cayluminstitute.com. On today's episode,
I think there's a very, very strong element into why you should be joining a trading community, right? It puts the right amount of support system in case that you're weak at something or you're down in the dumps, you're having a string of losses in trades, and you need to rebound. However, the support group should not take over your trade. You're the one controlling your trade, nobody else. Don't blame anybody for your loss. Don't blame anybody for your success either. That's yours and only yours.
call it what you want, a game, an experiment, a gamble. But stock trading in the global financial markets to us is a business. Every day you're surrounded by the noise. Buy, sell, hold, buy more. And we're going to quiet it down and filter out the best trading strategies, tips, and stock picks. You want information on how to find your next bagger or home run? You'll find it right here on Short Stops.
Ladies and gentlemen, welcome to episode 22. We've been here for a long time, and in fact, we have so many traders out here trying to learn so much. But before any of these came to where it is today, we have a VIP who's been here for the last more than 30 years. So, without further introductions, I'd like everybody to welcome Mr. Juanes Barredo. Sir,
Hi,
how are you?
Hello, everybody. I'm good. Thank you for inviting me.
There's a lot of traders here in the market today, and sophistication has grown so much, I assume, over the last decade. But you were always one of the very first market technicians here in the stock market. So how did it all begin?
Well, not by my planning. What happened is that after I finished school, I started to take some work into stock market enterprises. Believe it or not, I started encoding data for a while for a different brokerage house. And it was how I got my feet wet in trying to understand what prices were like, looking at graphs. Also, it helped that I came from a background where my father was a technician as well. And so I kind of grew up with the language, and that's why it wasn't so foreign when I began. And one thing led to another, and I put myself into the market for a while. And when I realized what the market could offer me, I never looked back.
I'm surprised, like back then, wala namang tuturo, like formal education or anything, right? And you're probably one of the very few traders back then using technical analysis, looking at price charts. So how did you come to learn more about it, aside from your father? Did you read books?
Well, at the time, that was really the only medium of learning. Nobody was doing any teachings in the Philippines about stock market trading. You really had to get involved. You had to find somebody who would manage to be able to allow you to be able to see what they're doing. And believe me, I tried to go to 2 different brokerage houses. It was very difficult then. It's because I finished philosophy in school, and that's not what they were looking for. So all the doors were kind of shut until, of course, I met Chairman Lee, and he was the one who allowed me to be able to take a step into this world. And learning was really about what I saw other people doing during that particular time. When I saw that the facility for technical analysis was coming into place, it was compared with fundamentals, which is something was not very innate with me. And numbers,
for a lot of people, don't worry.
Okay. And so I saw that the path that of least resistance was more visual to me rather than the numerical side.
Okay.
And that's where I decided to choose that particular specialization.
Because there's so much sophistication now. So, say for example, you have back testing, you have a lot of use of internet resources, whether it's YouTube or podcasts, to learn more about trading.
Yes.
And it sounds so difficult back then, trying to figure out if what you were doing was right or wrong, because that's always the challenging part. So how did you get through about it and became better in terms of learning?
At that time, we didn't have back testing. We didn't have the software to be able to carry it backwards in time to try to simulate what you were doing, and our testing was live.
Exactly.
And so we had to cast our cash into where our mouth was. Yes, it cost us a lot of money in the beginning, but we really thought that this was the expense of learning during that time, and there was no alternative. It was you tried here or you let somebody else do it for you, and I couldn't find that other person to do it for me. So when I joined a brokerage house and they gave me the responsibility of putting up a research team in the beginning, and I felt like a fish out of water. I didn't know what to do, where to start. I didn't even know what the liquidity ratio was when I began this. I bought a pocketbook that would teach me all that financial stuff, and it just went past me, and I didn't know what I was doing. When I picked up a technical analysis book and I started looking at charts, it seemed to be more, like I said it earlier, I used the word innate, and it was easy for me to see patterns and understand what these books were, and that's why I gravitated towards that direction. But it was hard. I mean, I didn't have a mentor during that time. My mentors were people in the trading floor. And when I joined first, I thought what these guys knew were priceless. Right? And I just figured it out that 9 out of people in that room didn't know as much as I did anyway. And a lot of them were trading on gut feel, all in high emotion. And I said, my God, for me to do this, I'm going to have to do this on my own. And so learning from books, learning from mistakes from other people and myself. And that was eventually how I educated myself in all of this.
And being one of the very few traders, I mean, using technical analysis back in the day, I'm sure the markets were much less efficient than what we're seeing here today.
That's correct.
So what was the biggest differences in how markets were reacting back then?
Back then, markets were slower. So sometimes I had time to get into a trade. A pattern sometimes could take weeks and months long to generate. Today, it'll happen in a flash. Right? So I had time to do things. I had time to get in. I had time to get out. I even had time to think about what I was going to do. Today, you have to be battle ready. You have to be prepared. You have to have that script behind you, know what your fallback is. And that level of sophistication today is really, I would say, seemingly looking backward would have been a challenge back then. But today, a lot more people have access to information. They can look at things. They can be a bit more prepared. They can have online tools to get everything very much ready. But yes, before, even just looking back, it felt like a dinosaur system altogether.
But even with the information asymmetry, how has technical analysis evolved also over time?
Well, the basic principles are still the same. But be it that, of course, like I said, you had to work at things that were much faster today. The basic principles of why market patterns create themselves are still based on supply and demand. That has not changed. You just had to be a bit faster to be able to pick up on the market insinuations as they come around. And when you see a lot more of these things moving off today, and I grew with the science and the time, so I didn't think that the adjustments were very harsh because it took time to adjust anyway as it came along. So yeah, it was hard then, but didn't really have much to compete with them either. Like you said, I mean, we grew up in a situation where technical analysis was only used by a few people, and I was privileged enough to be able to join the house that was very strong in technical analysis. So it did help that I had a little bit of that support system when I was beginning.
And now that there's a lot more traders now using technical analysis as their main tool for trading in the markets, how has this become an edge that more people know about what you do?
Well, I'd like to think that what I do, that I only have one competitor. I don't like to have competitors and saying if there are 10 traders in a room, I don't even compete with them at all. I only compete with one person. That's the market. And that helps me a lot because I don't have to say that I have to outperform this guy or that guy and know what trading style he's using or what he's using against me. The more I take the market as a whole. And my ability is really simple. My goal is I want to take money off that guy. And that market is preventing me from doing it. How do I outsmart it? How do I know what it's doing? What is it thinking ahead of me? I know it's putting clues up on the table, and I have to read it quite clear enough for me to be able to take that goal off my hand. And so just ascribing to that is probably the only mission that you have. If you worry about too many things, trading alone is hard enough. And the last thing you want is to have an army of 10 or 100 people in a room and trying to compete against them.
That's good. That's great advice. I mean, a lot of people like to compare, especially with social media today. It's so easy for you to go up on Facebook, go to a social trading group, and see people making money. So you try to emulate or try to copy. Why is this guy doing so well?
That's correct.
And it might be not fit for everybody else also.
I think my advice for people who view that is, I think there's a very, very strong element into why you should be joining a trading community, right? It puts the right amount of support system in case that you're weak at something or you're down in the dumps, you're having a string of losses in trades, and you need to rebound. And if you don't have a support group inside to be able to create that lift sometimes when it's necessary, you're involved into a situation where you can be stuck in quicksand for a very long time. A support group's there to get you out of that, right? However, the support group should not take over your trade, right? You should always be a trader with two hands on the wheel all the time. If you have a third hand in that steering wheel, it makes things much, much more difficult to put under your control. And so, yes, listen to advice. Yes, go ahead and go to join these groups. See what they're thinking so that you might be able to correct the mistakes that you're doing. But please, you're the one controlling your trade, nobody else. Don't blame anybody for your loss. Don't blame anybody for your success either. That's yours and only yours.
Fantastic. Guys, please listen to that 2 times or maybe 3 so that you get into your heads and to get into your system. So something more specific. What's your favorite technical indicator?
Well, I'd say that MACD would be my best. A lot of people underuse the MACD. In that one indicator, you can have a lot of things inside. Tells you the trend, tells you the force, tells you the timing. And if you know how to be able to do that, I even see patterns in the MACD. People just look at the buy and sell crossovers. And just like I would see different patterns in the classical formation, I see patterns in the MACD because I just use it too often and I know what the differences are already. So it's a very powerful tool, and I suggest everybody master that.
Why do people misuse it then? I mean, you were saying stuff about they only look at stuff on their crossover. What did you mean by people not maximizing it? What do you see that other people don't, if I may ask?
Well, the MACD is used as a force indicator. They have to be able to see how strong market movements or trends are. By looking at the MACD, I can combine an RSI, I can combine the stochastics, and I can even use an ADX on that at the same time just by looking at one indicator. They're giving you all the clues inside there. The way the MACD's angular formations are, the way it crosses over, certain patterns on how it could cross over would tell me it would be fake. And you can actually rely on that type of movement, especially on tops and bottoms, and it proves to be very helpful. If it's on the positive side or the negative side, and that also gives you clues of how strong the trend impact has been. And that's really one tool that if people know how to be able to maximize, they don't really have to look to too many things.
Because I assume, like back in the day, especially when you're starting out, I don't know if you remember yourself starting out using MACD, but I'm sure kasi most of the cases puro black and white lang nakikita nila eh.
Mm-hmm.
So it takes time before they develop that eye and which comes through experience.
You're
know
right.
more about.
Yes, yes, that's correct. I guess the familiarity with the use of something is what generates expertise.
Mm-hmm.
If you don't have your 10,000 hours, and I'm not telling you need 10,000 hours to do this, but in a sense that if you've not focused on its use and carried it with you and traded with it, and you're just relying it based on what the books say, you're not really learning too much. So you have to really drive the application of the science inside here and let it live through it and see how it can tell you the little differences inside situations. And that's how you can maximize the use of something when you're very, very familiar with it.
Given on a daily basis,
Yeah.
and you look at a chart, how many indicators normally are on there?
Well, I normally just put maybe 2 or 3 indicators. I mean, moving averages, MACD, are normally always on my graph. Everything else, I've been in this industry long enough to understand, even if I don't put an RSI, I know exactly where it is, or an ADX, I know exactly where it is, so I don't need it up there anymore. But I just need the visual representation of immediate degrees of support from the moving averages, and of course what the MACD is telling me, because I told you MACD, to me, is like 3 indicators in one. And so I don't really need that much. But once people get used to it, I think the reliability of too many indicators can actually be toned down, because sometimes you put too many indicators there, you have too many signals, and you don't know which one to follow. So try to be comfortable with what you already have, master them, and that's what you use into your trading system. I don't use the ticker for one basic reason. I mean, I don't need it because my mind's prepared for what's happening. If you're prepared and you see the price and you act, a ticker should not be able to be commanding you to be able to do something. Also, if I'm not ready for a stock for today because I didn't see it yesterday, I won't trade it today, even if I see it in the ticker. That means that you just get, what's the word, higop into something, and that's the last thing that you want to do. A prepared mind is ready for an activity. You seize the motions in the price, you trigger it, and just carry what the trade tells you to do. Ticker is noise.
Stay disciplined. What are the most common mistakes you often see, especially for people starting out?
Well, I think most of mistakes are really driven by emotion. And right now, that's the greatest enemy a trader has. And from fear to greed, desperation can also generate wayward acts that can be quite costly into somebody's account. And solving that emotional problem should be the first big thing a trader should do. And I think the second should be the element of doubt. I think the biggest problem also traders would have is they don't believe in themselves too much. They're growing into a society that may be demanding. They're looking into a science that they're not too familiar with. And as they buy their first breakout, or they trust their first crossover in MACD, or see what happens in a first breakdown condition, the tendency for them is to be able to see, is this painful or not painful? If it's painful, I don't want to do it.
I have a response to that. Because a lot of people, when they make money, you assume that they're doing right. When you lose money, you assume mali ka na. Right. So that's why the feedback in trading is so painful, because sometimes you don't know, maybe a trade where you made money, baka mali.
Right.
Or a trade where you lost money, baka tama rin naman yung trade. Right? So that's the other challenge when it comes to a lot of people starting out. Right? So,
and even the more sophisticated.
Yeah, even the more sophisticated.
Because if you think about it, let's say, for example, okay, I bought the trade and I'm already making money, but the amount of money I'm making is so small. And that itself will not allow you to relinquish a position even if it hit your target, because you're not satisfied enough. And you see, there's an element of greed that you're not satisfying. And because of that, the tendency for you that the prices whip back, fail to get your target because you don't feel satisfied enough, and you don't cast the necessary profit take signal when it's timely. So again, the emotional problem gets, always ahead of it. So,
even for people experienced already into the markets.
Oh, it happens to me once in a while, so I can't say that I'm devoid of that. But I think I've managed to scrap 80% of that problem out already. But it might take some time to hone in on your skills to do that.
So what would you advise somebody starting out and going through all of these emotional roller coasters? How would they should challenge themselves, and how should they pick themselves up?
I think first is let them know who they are. Because in order for you to be able to get involved in something like this, the persona coming into the effect must be controlled in a very different way. Very aggressive traders that I've seen in the past, and many who I've traded before, could be extremely gung-ho. In a very strong market, they'll make all the money in the world. The minute the market turns around, they lose all the money they make. And so, why does that happen? It's because, yes, they're so open, they're very aggressive, but they're very aggressive always in the good time, but when defensiveness is necessary, they're very aggressive. And that's what sometimes can generate a very big hole in their pocket in those moments. So I think they have to know who they are, right? And then when they see that they've managed to understand who they are, they know how to temper themselves, then they can go into the next chapter, which is understand your market. So you know yourself, you know your market. When you say you know your market, you have to know, what is the landscape that I'm getting into? Am I in a strong market, in a not so strong market, or am I in a bear market, right? And I think it was Sun Tzu who would always say, before you go into battle, you better know what the battlefield looks like, because that's half the war won right there if you know what it is. If I were to jump in the middle of a battlefield and I don't know what's coming from the left or the right, I'm going to spend my time ducking all the time, and I'm never going to be able to get anywhere. So in your ability to understand the surface of where it is that you're coming to, you're going to know what the battlefield's like. So you know what your repertoire of tools are going to be used. I know what to do, what to get in, how high to expect the market, and if it's going to whip back, is it going to be very sudden or will it be more gradual? And that's where you can start to be a bit more refined in the tools that you attempt to be able to use. And of course, last, you must know your plan, right? So in order to do all this and make it complete, the plan element is the most important. Me, it's very simple. Know your plan and then execute the plan. And once you get that done, I don't think the mistakes would be too much, and you'll be able to bear with more of the positive sides of the market rather than the negative sides.
Great advice. There's a famous quote: "You'll know more about yourself trading in the stock market for a year than your entire life."
Yeah, I agree. The market has been the biggest humbler of people. Bring the biggest ego here, and you'll flush yourself down the toilet faster than you would know.
Okay. So maybe last question is, what's your views on the market and where do you see this market going?
Well, I know there's a lot of uncertainty going around right now. We've just gone through the major sell-off into the market all the way down to the 6,900 zone, but we've recovered nicely since. In fact, the recovery has actually been a little stronger than many anticipate, and that's a good thing. And there might be a little bit more of that recovery coming in hand. But I think our upsides may be a little bit limited, in so to speak, that we're just waiting for this to be able to top off. Then we'll probably have to be able to go sideways after that. That should be able to give time for markets to be able to pull values necessary back up, or to tell us whether things are going to slow down even more. And in that environment, I would anticipate we're going to have a very big consolidation band to be able to expect. So you want to be looking to take advantage of the dips in these particular cases. And when you see large surges in prices, then you take half of your position off, wait for the market to draw itself back down, then you reposition with whatever it is that you sold inside. So take advantage of this market is, but I don't think we're in a situation where we're going to have a runaway situation. I don't see why that would be the case.
So you still think it's a buy low, sell high type of environment?
I think we do that for now, and until we can see very selective movements that look a little bit stronger. What's fortunate though is I've seen a lot, not a lot, but at least a good size number of reversal patterns forming. We've seen it in Globe, we've seen it in MPI, and big patterns like this, we need to be able to see more of before the market can reset itself and generate much more uplift. But traders will have a lot of opportunity. I think this is the market where you do it, but it'll be more selective. You have to be more attuned to which markets to cast, because you can't just buy everything broadly and make money here. There are quite a bit of issues that are still very weak. You want to stay away from those and look for the issues that are underlyingly strong, and keep yourself focused with those things. You'll have quite enough opportunity on the trading side into the short and medium term.
Guys, this is one of the very few podcasts you have to listen, especially if you're starting out and trying to build your own career as a trader. I think we had substantial advice coming from Mr. Juanes Barredo. I hope you guys learn, stay in this game, stay disciplined, grind this out, and hopefully trading profits will come. Thanks again, Juanes.
Sure thing, and good luck to everybody else.